won't be on tomorrow. I will be on Saturday after my class. And I'll be on Sunday, and I'll be on Monday. 4 categories where it's 80% deductible instead of 50. Truckers. Railroad employees. And I'm not talking about the commuter lines. I'm talking about the freight, Conrail, and that. So, railroad employees. Airline employees. And members of the Merchant Marine. To me, those are the people on the freighters. For those people coming in, this was not for the exam, but for the exam it's 50% deductibility business meals, but just for your notes, not the exam, 80% deductible business meals and entertainment for truckers, railroad employees, airline employees, and people who serve in those ships, the freighters. What's true of all those employees? They're all involved in transportation, aren't they? Whether on the road, or on the truck, or on the plane, or whatever. Someone might I put that as a topic. Maybe someone can research that. I know there's a lot of benefits the trucking industry has, because they must have a strong lobby in Congress. Documentation. I have a case with me that I didn't lose, but I won't read it, about an Irish gentleman who was a drug dealer. Now, he was a dealer in marijuana, and maybe that'll be legitimate now that marijuana seems to have a new perspective. And what can I say? This was when it was not necessarily medicinal, but was used for other purposes. Although I understand, I've been reading that the marijuana from my generation in the 60s and 70s was a lot weaker than this marijuana that they're growing now. So I will not be inhaling or anything or testing it, but if you know of someone, you can let me know. Just curious. But at any rate, he reported his drug dealing on the Schedule C. He didn't say it was a drug dealer, he said it was a wholesaler, just in saying what. And it's an interesting case because the big code section here is 162, where you can deduct ordinary and necessary expenses with regard to a legitimate trade or business. And a trade or business is where you have a reasonable expectation of profit. Well, he was allowed to deduct stash house rental, armed guards, compensation for office expenses, because they were ordinary and necessary expenses associated if you're in that dealing. Remember I was talking about, what in prostitution and what would be appropriate there. Now, but they said he could not, it said in the case that he often would entertain clients or customers and he would pick up the restaurant tab. But he was not allowed to deduct that in the case. Why? Well, look at the documentation. What's the first word? Who. That's what he didn't want to tell. Because who would be who his customers were. I'm sure the what, well, we discussed how much we were going to pay and when they needed deliveries of the weed. The where is probably relatively apparent from the receipt and how much. But there's a lot of rules on documentation. I'd like someone to look at this because my recollection is a few years ago they said that you only needed receipts if the amount in question was greater than $75. The standard for years had been $25. And my dealing with IRS agents is, I don't like the 75. I think the more receipts you've got, the better your case will be. So you take a client out to Denny's for the Grand Slam breakfast. Oh, I'd love to have that, but it's so unhealthy I can't afford it, health-wise. Bacon and ham and eggs and flapjacks or something. Oh, geez, it must be nice, but can't do it. Got to have a more healthy diet, so sorry. And let's say the bill is $22. I would keep a receipt and organize everything, and then if that gets challenged, because there's a lot of challenges in this area because there's a lot of abuses. Show them all this documentation, they'll get bored after a while, and they'll say, stop, that's enough. So, but someone check, see if they can find that $75, but don't believe it. Have as much documentation as you can. And there should be contemporaneous records. I used to tell some stories because I used to do some tax work for performers at the Lyric Opera, international performers. Be cautious. Meal cannot be lavish and extravagant. That's very deceptive. For years there was a restaurant up in Wheeling called Le Francais. It's like $150 flat rate, and that's not with beverage. I don't care how good French food is. That's ridiculous. But that would not be deemed to be lavish and extravagant because many wealthy people order off of those menus. They're always talking in the newspaper about all these professional athletes going to Gibson's and all these real exotic, steakhouses because they can afford it. Yes.
Okay, so my cousin's a lawyer, and they take their clients out for like $1,000 night or $2,000, crazy amounts. Is it just not tax deductible? Do they just expense
Well, no,
it?
if they are ordering traditional items that are frequently ordered on the menu and so forth, I think it's deductible. I think it's deductible, even though we would deem it to be ridiculous.
Mm-hmm.
What are they referring to? Let's say that there's on the wine list a bottle of 1982 Chateau Rothschild Cabernet Sauvignon for $1,000 a bottle. That's what I think they're getting at, because that would be something that's not normally ordered. But if the law firm is offering off the regular menu, even if they're having a lot of, everyone's having 5 cocktails each, and they're having appetizers, and I think that's fine. That would not be deemed to be lavish and extravagant. Yes, Dave?
So if you took them to the strip club and they got a lap dance, that would be a normal thing they order off the bill. Would they be able to claim that too?
That's an interesting question, because I understand that when you're entertaining a number of Chinese business people and they come here, that they expect to receive services of that nature. Interesting point. If at that, and I would assume at that particular club, not being familiar with these establishments, that lap dances are probably rather frequently provided for regular customers. They are also not illegal, assuming the coverage requirements and so forth are met. So, yeah, that's a good point. There's not receipts because the dancers don't want to pick that up in income. Interesting point. What if you charge it to your, can you charge it to your credit card? Because then I'd have a receipt. All right.
Or if it's under a certain amount.
Hadn't thought about that, but it might be. Now, you must be present. I want to comment on this one, although I think it's self-evident. Let's say Amy's coming in from out of town, and she's a potential client. So I want to take her around and impress her so I get her business. So I meet with her, let's say, I met with her, let's say, Thursday today at 2 o'clock. And I said, well, Amy, I've got class tonight at Keller, so I can't be with you this evening. But I made a reservation for you at the Wildfire. And so it's already set up, and you won't have to pay. And then I said, I understand you like jazz clubs, so here's some clubs that you might want to visit. And I give her $500 in cash and say, have a good time. I'll meet with you tomorrow morning at your hotel. We'll have breakfast at 8 o'clock. Now, notice, although I'm subsidizing her entertainment, because I'm not with her, or I have no one with her, no business can be discussed. So obviously that's not deductible. But let's say I have my attorney accompany her and say during the course of the evening when you're with Amy, can you please bring up these business matters? And he does that. Then, of course, he's my representative, he's my agent. So then that would be deductible. Now, let's go through 2 situations that are on the matching. And we'll go to our last meeting. We're doing well on time. Much different than Tuesday night for a number of reasons. Let's say that you are an employee and you took out a potential client out to lunch, say $150 or something, and then you came back to the office and you submitted an expense report to get reimbursed by your employer. And your employer reimburses you the amount you requested. What is the tax consequence to you? You requested $150, or whatever it is, you got $150. Is there any tax consequence to you? No, nothing. You have no taxable income, you get no deduction. Who's subject to the 50% deductibility?
The employer.
Employer. Okay. But let's say in another scenario, you did the same thing. You took the potential client out, $150 or something. You submitted a reimbursement form, and then it turns out that the employer says, no, I'm sorry, Bill, I know you had good intention, but we are no longer reimbursing except for top executives. So I guess you're going to have to swallow this one yourself. Notice in that situation, there's a double-barreled shotgun, and you're going to get it from both barrels. This is on meals and stuff. First of all, you're the one subject to the 50% deductibility, and this becomes an unreimbursed employee business expense. And unreimbursed employee business expenses are miscellaneous itemized deductions that are subject to the 2% of AGI offset in the aggregate. So notice, not only are you subject to 50%, you also got to go to the add them all together and reduce it by 2% of AGI. These are some handouts from student research from different websites that deal with business, meals, and entertainment in more depth. Thought that you might have some, find those kind of interesting. I'm sorry? I gave those last night. I'll give you one of these. I'll give you this one. It's a little shorter. It's an extra souvenir of having come today. Now, we're getting ready close to the time for talking about the exam, but I'm going to shorten something, and I didn't get hardly over it in your class at all. One of the aspects that's not really being tested here, but it's an important area, is do we have, and that's over here, do we have a legitimate trade or business? A legitimate trade or business, or do we have a mere hobby? If we have a trade or business, then we can certainly show a loss if necessary. If, on the other hand, it's a hobby, basically you can't show a loss. Hobby expenses are only deductible to the extent of hobby gross receipts. Inundating you with paper now, sorry. This is an informal handout from an old problem from an earlier text we used to use, dealing with a dog breeding operation. And I just want to show you the impact of this, then I'm going to do a real short summary so we can get into the matching area, which will be significant for the exam. What I showed here was, in this dog breeding operation, if this were a trade or business, it would have been on Schedule C. And notice there were a variety of expenses that were deductible because they were business-oriented expenses and were showing a loss of almost $5,000. On the other hand, if this were a hobby, notice we could only deduct $13,545 of the expenses, and those would be miscellaneous itemized deductions that in the aggregate would be subject to 2% of AGI. So the distinction between whether or not something is a hobby or a legitimate trade or business is a major one. When we used to have more time in the course, and I have a lot of materials here on it, we used to discuss all the criteria and some sample cases. Let's just talk about a few of the criteria that would establish if you have a legitimate trade or business. One factor would be the cause of the losses. The cause of the losses. For example, let's say you're involved in agriculture. What's the problem that you have with agriculture? Weather. Yes, Amy's right, weather. Severe drought or monsoon rains. So what's the cause of the losses? Another factor that's often looked upon by the courts would be your history of income or losses from the activity. History of income or losses, but this is a deceptive one. It's deceptive because you say, well, Bill, if I've had profits for 30 years and now I'm generating losses, the IRS can't challenge me. Wait, think about it. If you're using the same marketing techniques that you've been using for 30 years, and you don't have a website, and you're not, changing the layout of your property, you don't have a reasonable expectation. You've got to keep up to date. Have a new business plan. Have a new marketing plan. Have the website. Things are changing. They also talk in the cases about something that I hate. They mention the success of the taxpayer for other activities. Success of the taxpayer for other activities, and I say, why? What difference does that make? There was one case I remember involving an accountant who also had a lot of real estate activities, and he opens up an Arabian horse farm. And they said, well, he was very successful in his real estate ventures. What does that have to do with raising horses? But there's a weighing of factors, and I'm hoping some people will find some cases. There's at least 1 or 2 cases every week in this area. Another one, the financial status of the taxpayer. Financial status of the taxpayer. Let me ask you a question. Do you think a wealthier person or a poorer person would have a better argument here that they had a legitimate trade or business? The wealthy or the poorer person? Well, I think it's the poorer person. The wealthy person doesn't need profits. They got so much money coming in already. There was a case like that. An accountant decided to go down to Florida and set up a charter fishing boat operation. It was successful. And then he decides to sell or trade in his old boat for a much larger boat, but then his clientele fell off. And he had losses, and the IRS challenged them, but the court said, wait. This guy needs profits from this business because he's in hock up to his ears. To maintain any type of style of living similar to what he's experienced, he needs profits. As opposed to the guy who, geez, this is just a sideline for me. I got so much money already coming in. Another one that's obvious is the time and effort of the taxpayer on the activity. The more time and effort you devote to the activity, obviously, the more likely it is that you have a legitimate trade or business. And one that I would just mention one more, because the amount of time and effort devoted to the activity by the taxpayer. Just in closing on that topic, and again, I had a whole lot of stuff, but I used to spend so much time in that area, I had time for nothing else. Judges like to see spreadsheets. They love to see business plans. They love to see marketing plans. I think judges like spreadsheets because they can't do them themselves. So come up with a lot of spreadsheets, and you really should anyway. You should have a business plan anyway. You should have a marketing plan. Just like now you should have website development. You should have these things anyway, and they'll certainly add some legitimacy to your claim of a business. There is a rebuttable presumption if you had a legitimate, if you had net income in 3 out of the past. Oh, look at this. Okay. This is wrong. For those who took pictures here, it's not that tight a standard. Sorry. It's 3 out of 5. Sorry. It used to be 2 out of 5. They made it 3 out of 5. It's not 3 out of 3. There's a rebuttable presumption that the IRS could rebut that you had a legitimate trade or business. Now we're going to talk about, we're basically talking about the exam. But we're first of all looking at the matching part of the exam, and this will be on both exam 1 and exam 2. So make sure you hold on to the sheet for both. It will not be on the final. And these are kind of tricky, but you can test a lot of areas in a short period of time. So that's why I like to have some matching in there. I started with a standard matching from our publisher, matter of fact. And then, oh, I'm sorry, give it an extra one here. Change for a dollar, all right. And then basically, I pretty much revised almost everything that was in there with my own items. So we're kind of winding down here. I may need a few extra minutes at the end, but we're doing good. You guys are great. I'm feeling much more relaxed than I did the other day. Okay, let's see what might go into some, let's just put some representative items, you can guide me here, that might go into each area. How about for a letter? Now these are tricky. This is a tricky part of an exam. Items that are letter A, alpha, fully excluded from gross income. What's some examples of fully excluded from gross income? Yes, workman's compensation awards, life insurance proceeds, what else? Fully excluded. State municipal bond interest. I'm sorry? Do you need a pen or something? Where's the script? Okay. State municipal bond interest. And one where I disagree with the author, but Bill's grading the exam. Compensatory damages received in a defamation suit. Compensatory damages received in a defamation suit, you know, like libel or slander. Our book said that was taxable, and based on the Carol Burnett case and Tom Selleck, I'm saying no, it's not taxable. You can think of others, I'm sure. B, fully included in gross income. What do we have besides wages and salary? What else? Commissions, good. Alimony received. Remember, if it's alimony, it's taxable and deductible. Child support is neither.
Interest, dividends.
All right, yes, interest and dividends, good.
That would be good.
Yeah, we mentioned that one. It definitely goes in, definitely goes in. How about if I embezzle money from my employer? How about if I have illegal income? Would that be B, fully included gross income? I don't think a lot of these people pick it up, but they're supposed to. Remember how they got Al Capone? Income tax evasion. So those would all go into B. And please put down, to keep Bill happy because he's obsessed with this, the entire employee death benefit. The entire employee death benefit. Although there was that excellent research that showed that $5,000 exclusion, that is gone now. So let's look at C. Partially included in gross income, amount received on an annuity. Amount received on an annuity. That'll be a question on that on the exam and the multiple choice part too. We'll talk about that as we wrap up at the end. Okay, oh, I know, the one I had personally, remember? The school insists that Bill have life insurance that's equal to his salary amount. And although I'm not highly compensated, I'm not complaining, I do receive more than $50,000. So group term life insurance coverage provided by the employer, group term life insurance coverage provided by the employer in excess of $50,000. And remember, we said it was $50,000 in 1973. It has not changed. Now, category D and category E, delta and echo, these can appear in two places. These could be on Schedule C as expenses, D and E. But they also could be on the 1040. They also could be on the Form 1040. Number at the bottom of the 1040, the long form, the items from gross income and arriving at adjusted gross income, alimony paid, half the self-employment tax, they also could include those items. Now let's talk about a situation. Let's say I have a proprietorship for income tax preparation. I'm using Schedule C. Actually, I could have an LLC and have that, because a single member LLC files Schedule C. And turns out that I subscribe to CCH. CCH, our publisher, although it's part of Thomas Reuters. Oh, don't forget, please give me this before you leave. I'll be in trouble. The center's good to me. Well, when I have my birthday, they have a little celebration for me. In the loop, no one even acknowledges it. Yeah, they don't care.
That's okay, I'll put them.
This, all right, okay. But please give me this, because I promised that I would submit that, remember. Even if you just put a note that you need more consultation or something. So remember that. I almost forgot this folder here, got excited. So I had CCH as the best publisher for practitioners. Their standard federal tax report series is definitely the easiest and the most comprehensive. I actually have an old set of it when it was paper, where you had loose leaf pages that you changed all the time in these black and gold volumes. They actually, 10% of their clients still use that, but everybody else does it electronically for obvious reasons. So they have a special that if I subscribe to the next 3 years of their standard federal tax reporter series, I will only have to pay $6,000. That's less than it normally would cost me for 3 years, plus they usually raise the price each year. So I do that. I pay them the $6,000, I'm entitled to their service now for the next 3 years. Guess what? Although I'm cash basis and I paid $6,000, guess how much I can deduct on my Schedule C per year? Only $2,000. They're putting me on the accrual method, aren't they? Only $2,000. So to me, I think to me that would go here into category E, partially deductible from gross income, because it's going to be on D or E because it's on Schedule C, but I only can deduct 1/3 of it. Remember the example I went over earlier today? The doctor filing Schedule C, and he paid his college sophomore daughter $5,000. Her services were worth $1,000. Same idea. Same idea. So it'd be category E because I could only deduct what the services were worth. So category E has some interesting things. Business gifts. Remember my example with business gifts? I'm limited to $25 per donee per year, per customer per year. So a lot of E could fall into that category. D might be depreciation on equipment in my home office. Depreciation on equipment in my home office. Category F, you might, well, don't write this on here, but you might consider this a dying breed. This means Schedule A, itemized deductions that are not subject to limitations. And what we have here now, we're going to lose after the 2016 election, no matter who wins. But right now, it would be state and local taxes. State and local taxes. Because right now, you can deduct your state and local income tax or sales tax.
You said this is D?
This is category F. F, a dying breed. State and local taxes. That would be your state and local income tax or sales tax, real estate and personal property tax. And let me tell you, in all the tax proposals, those are down for elimination. in which case I don't think I can think of anything for F. Now, a couple years ago, a student ran short of time. So on the exam, because time was running out, she put F down for every one. If you're going to guess, it's almost never F. So don't use F. G is huge. G. G as in golf. It's huge. Medical expenses, because they're subject to a limitation. Charitable is subject to a limitation. We'll see this. Bless you, bless you. We'll see this next week after the exam. Charitable. Casualty losses on personal property. Casualty losses on personal property. I was going to go over that today. That's right. I didn't do it in the other class either. Casualty losses on personal property is subject to a limitation. Mortgage interest. There's still an interest, there's still a limit of $1 million on a mortgage interest loan. So a lot of items there. How about this? Put unreimbursed employee business expenses. Unreimbursed employee business expenses. G will be, we'll have G here, G will be real big in exam 2. So remember G. Make sure Bill can read your G. H, not deductible at any time. Child support, right? Child support. I think this one is on the second exam. Loss on the sale of a personal residence. Loss on the sale of a personal residence. Here's one that changed a number of years ago. You guys probably don't remember this. Consumer interest. Loss of the sale of a personal residence. Consumer interest. You're too young, but until the '86 Act, you could deduct credit card interest. That was fully deductible. They disallowed it in the '86 Act, but they allocated it out over the next 4 years. They phased it out. Now, you know, the credit card interest not deductible, personal. The only thing you can deduct is student loan interest or something because there's a special limitation.
Is that on the Schedule A?
Schedule A. But it used to be right on there. You could deduct that. Of course, I can remember when you could deduct gas
You said that's
taxes.
on the Schedule I.
Schedule A, itemized deductions. I remember when you could deduct state gas tax. That's been going since the 70s. Been around too long. Remember too many of the good old days when we could do these deductions. But be careful. Let's say I put this down. Taxpayer puts a new roof on his personal residence. If I said taxpayer puts a new roof on his personal residence, the answer is not H. The answer is I. Must be capitalized and not amortized or depreciated. So capital improvements to personal property is letter I. These are tricky. Matching is a pain in the rear end, but I can test a lot in a short period.
Capital improvements.
Capital improvements on personal property would be letter I. How about this? I'm trying to think of another I off the top of my head. Well, that's all I can think of off the top of my head, sorry. J, a lot of stuff goes in J. For example, put down professional fees associated with the acquisition. Professional fees associated with the acquisition of a piece of equipment. Professional fees associated with the purchase of a piece of equipment, or acquiring or applying for a copyright or patent, or applying for a copyright or patent. Bill, what do we mean here a second? Let's say you hired an attorney, and you're going that attorney's going to help you acquire some equipment used in your trade or business. That attorney's fees are part of the cost of the equipment. You're applying, paying fees to obtain a copyright or a patent. Those are part of the cost of the copyright or patent, and copyrights and patents are amortizable assets. How about this? The cost of a racehorse would be J. Racehorses are depreciable assets, and hopefully they are income producing. I actually had 2 clients when I was at Arthur Anderson who had racehorses. One of them was named Cadeo. I don't think they were very successful, but I remember those because they were depreciable. Okay. Deja, did I have anything else on I on Tuesday? Do you have anything else on I?
It was the same thing.
Okay, I can't think of anything else right now. We're covered for this exam anyway.
So how long do you depreciate a racehorse?
Usually 3 years. 3 years. Though their racing time is often more limited than that. So the second part of our exam will be, for exam 1, 16 of these, 3 points each. There's 1 letter per one. Now, for example, on one of these I would have accepted more than 1 letter. One talks about you're reimbursed for business expenses you incurred by your employer. The answer to that is either A or H. A, there's no income to you, or H, there's no deduction for you. So I would accept either one of those answers, please. But please write legibly, because if I can't read it, guess what? All right, now let's just talk about, boy, we're doing so well today, gosh. Man, it was so much different on Tuesday. I'm so much relaxed here now.
Kick him out!
Sorry. I'm trying to record it because I'm running out of batteries. Sorry.
Oh no, we need 15 more minutes or so.
Back up, yeah.
Are you okay now? Okay, good. Now, the categories for the multiple choice. And then if I have time, or you give me another 3 minutes, I want to give one, I'd like to give the casualty loss deduction amount. It's more of exam 2, but I'd like to keep us a little bit ahead here. All right, the multiple choices. Now, first of all, I want to make sure people, especially if there's international students, understand what this phrase means. Some of these questions say designate which of the above persons qualifies. Designate which of the above persons qualifies. These are on personal and dependency exemption questions. I've had some students who marked the number but didn't tell me who the people were. So like in the first question, there might be 8 possible people. The answer might be 5, but which 5 did you mean? So question 1, 2, 3, 4, and 7. 1, 2, 3, 4, and 7 deal with personal and dependency exemptions. 2 of those require you to indicate who are the above people who qualify. This is stuff like cousins. Remember all the stuff we talked about? One of them is a multiple support agreement.
Wait, you said, repeat the last
1, 2, 3, and 7. 1, 2, 3, 4, and 7. 2 of these you have to designate the people. In one of these, one of the possible people is a cousin. But remember the restrictions on cousins? You'll call them class 9. They have to live with you the whole year. So remember all that. 5 and 6, filing status. Filing status. Now on a question like filing status, you don't have to write anything. All you got to do is circle the answer. It's not computation. You don't have to justify it. You want numbers. I know, I hear you. Number 8, gross rental income. We want taxable gross rental income. Now this is the problem. This is the problem where we had the tenant giving a note in payment of rent. You're going to pick up the note at FMV, fair market value. This is also the one where another tenant gave a check to the building superintendent. Remember, that's constructive receipt. And there's some improvements that a tenant made. It'll tell you in the problem if they were in lieu of or not in lieu of rent. Remember that distinction. Show the computation. Number 9, a whole bunch of stuff is happening. First of all, some guy's wife's gonna die. He collects an employee death benefit. There it is on the exam again. How do we treat employee death benefits? Fully taxable. He's also going to collect life insurance. Life insurance. That's different, remember. He's going to sell their personal residence, but there'll be no gain because of the exclusion. He's going to sell their personal residence, but the gain will be wiped out by the exclusion. Well, Bill, this one sounds pretty easy. Well, wait. He's going to receive a bequest. For those unfamiliar with that term, that's an inheritance. He's going to receive a bequest or inheritance of municipal bonds. What type of bonds? Municipals, upon which he's going to receive interest. So what type of interest is that going to be? Municipal bond interest. Don't say any more. Municipal bond interest. That's state and local bonds. You know. What's his taxable gross income? Number 10. This is we want net rental income. This is the 10 flat, where you live in one apartment and you rent out the other 9. We talked about this earlier today. Deja, in your class, this really got rushed. So you should do better because you're here and heard it at a more relaxed pace.
So you said this is number 10, right?
Number 10. If I leave something out, tell me too, by the way. Number 11. For the last time, I promise, employee death benefit. What's the treatment by the employer of that, by the way? Tax, that's right. That's right, it's deductible by the employer. Number 12, tuition reimbursement received from your employer. Tuition reimbursement received from your employer. $13. Somebody died. You're the beneficiary of their insurance. You leave the insurance proceeds with the insurance company. You leave the insurance proceeds with the insurance company. And what are you receiving? Interest. You're receiving interest on accumulated life insurance proceeds. Remember that treatment. Number 14. This is the annuity question. I'm asking, but this is tricky because one of the answers is the excludable portion, but I want how much of the annuity would be includable in gross income. How much of the annuity would be includable in gross income? I want the includable portion. Now, that means you're going to have to compute the exclusionary ratio, and it's the other part. Also, we did a little finger counting. The annuity is going to start on